analysis. I will talk about horizontal analysis of PETRONAS gas BERHAD. For liquidity ratio, PET gas is not performing well because the ratio kept decreasing from 2018 to 2020. PET gas has 7.04 current asset to every 1 ringgit liabilities in 2018 compared to 2020 that has 3.93 current asset to every 1 ringgit liabilities. The quick ratio in 2018 is 6.94, which is better than 3.89 in 2020. This means the investment in current asset by PET gas is become worse from year to year. The activity ratio of PET gas are performing well. Days to sell inventories in 2020 is 3 days, better than 2018 that took 4 days to sell inventories. Average collection period in 2020 is 48 days, better than 62 days in 2018. Average payment period in 2018 is 37 days, better than 54 days in 2020. Turnover in 2020 is 124.44 times, better than 82.48 times in 2018. This means the company maintains too few inventories in 2020. The fixed asset turnover in 2020 is 0.43 times, better than 0.41 times in 2019. Total asset turnover in 2020 is 0.3 times, better than 0.28 times in 2019. This means the company is quite efficient in using its asset to generate sales in 2020. The leverage ratio of PET gas are performing well. Debt ratio in 2020 is 17.88%, better than 18.06% in 2018. This means the company has decreased the amount of loans and has a low risk. Debt to equity ratio in 2018 is 24.92%, better than 25.29% in 2020, which means the company has high exposure to financial risk in 2020 compared to 2018. Long-term debt to equity in 2020 is 12.74%, better than 17.42% in 2018. This means the amount of long-term debt is decreasing to support the equity of the company year by year. Time interest earned in 2018 is 14.88 times, better than 13.82 times in 2020. This means the company can service debt payment well in 2018 compared to 2020. Lastly, the profitability ratio of PET gas are performing well because the ratio are increasing in recent year. Gross profit margin in 2020 is 47.5%, better than 43.73% in 2019. Operating profit margin in 2020 is 50.48%, better than 45.86% in 2018. This means the company has strong ability to gain more profits in 2020. Net profit margin in 2020 is 35.94%, better than 32.93% in 2018. This means the company's return on sales is increased from year to year. Return on equity in 2020 is 15.5%, better than 13.56% in 2018. This means the company is increasing its ability to generate profits from its equity from year to year. Return on assets in 2020 is 10.95%, better than 9.83% in 2018. This means the company is more effective in generating profits from the asset from year to year.
Next, move on to the vertical analysis. The liquidity of PETRONAS gas BERHAD is better as the company is able to pay back its short-term obligation. According to the graph, PETRONAS gas BERHAD has 3.93 current asset to every 1 ringgit liability. Minus the inventory, the quick ratio 3.89, which is the better than its competitor Petron Malaysia Refining and Marketing BERHAD. This means the investment in current assets by PETRONAS is good. The net working capital of the company PETRONAS is better than Petron, which is 2,929,206. This means that high working capital signals that a company is surely managed and also suggests that it harbors the potential for strong growth. The activity of the main company for the year 2020 is efficient enough as the inventory turnover is at 124.44 times, which is higher than Petron Group. Even though that PETGas has high inventory turnover, it doesn't mean PETGas has a better performance, but sometimes it may indicate inadequate inventory level, which may result in decrease in sales. The days to sell inventory for PETGas is 3 days, while Petron is 23 days. It means that PETGA is the better because it only holds 3 days the inventory before selling it. Furthermore, the average collection period for the main company is not efficient enough, which is 48 days, and it is higher than Petron. It means that PETGA's accounts are often overdue. After that, the average payment period for Petron is 35 days, which is better than PETGA's. It is because that a shorter payment period indicates prompt payment to creditors. Last but not least, the fixed and total asset turnover for PETGAS is not efficient enough, which is 0.43 and 0.30, which is lower than Petron. It is because PETGAS is not efficiently using its assets to generate sales. That of the main company for the leverage ratio is considerably high, which is 17.88% than the competitor, which is 15.53%. The debt equity ratio for PETGAS is 25.29%, is lower than Petron with 26.55%. Furthermore, the long-term debt for PETGA is not efficient enough with 12.74%, which means that PETGA is taking more on debt and it takes the company face the financial risk. Finally, the time interest earned for PETGA is better than Petron with 13.82 times, which means that PETGA is considered as an acceptable risk, and for Petron might be much higher risk for bankruptcy or financially unstable. Profitability ratio, Petron is low for gross profit margin at 2.58% in 2020. Also, the net profit margin is at negative 0.34% as Petron is operating with extremely high operating expense. The company is only able to control the resource for the operation as the return on assets is at negative 0.76%, but failed terribly at operating profit margin as they are not able to control all the costs gone for the operation. The return on equity for Petron indicates the trouble for financial decision of the company in managing operating cost to profitability ratio. Overall, the profitability for 2020 is in red zone for Petron as they fail to reduce the cost of operation. Okay, over here we have the risk analysis between PETRONAS, BERHAD and KLCI. From the table given shown the average return, variance, standard deviation, and coefficient of variation of PETGAS and KLCI. In terms of average return, we can say that PETGAS has a superior return of 0.0298 than KLCI, which is negative 0.0013. However, based on the coefficient of variation given above, PETGAS has a larger risk than KLCI, which is 51.5123 and negative 996. We may conclude that PETGAS is a high risk, high reward investment. The covariance between PETGAS and KLCI is negative 0.1507. Overall, PETGAS is better than KLCI. Here we have the X variable one-line fit plot for PETGAS and KLCI. According to the chart above, it shows that PETGAS market return has negatively related to the market of the KLCI. Every 1% change in the KLCI market return, whether it is positive or negative, has a 0.0544% positive impact on the PETGAS market return. Moving on, this is the risk analysis between Petron Malaysia Refining and Marketing Berhad. From the table given, shown the average return, variance, standard deviation, and coefficient of variation of Petron and KLCI. In terms of average return, we can assume that KLCI has a better return, which is negative 0.0013, than Petron, which is negative 0.0771. However, based on coefficient of variation, the risk for KLCI is quite high, which is negative 996 compared to Petron, which is negative 36.9374. We can conclude that KLCI can be related to high risk and high return. Overall, Petron is better than KLCI except for their average return, which is KLCI is more than Petron. Here we have the X variable one-line fit plot for Petron and KLCI. Petron's market return is favorably connected to the KLCI's market return as seen in the figure above. According to the calculation, every 1% change in the KLCI market return, whether positive or negative, has a 0.0811% positive impact on the Petron market return.
The company's intrinsic value for PETGAS is 60 ringgit.60 cent. However, the market price for PETGAS stock is 60 ringgit.86 cent, which means it sold more than its intrinsic value, hence resulting in overpriced and overvalued. When the market price is higher than its intrinsic value, it is recommended for investors to sell the stock to gain profits. But in this case, it is better for the investors to hold the stock first as the indicators show no signal to buy and sell. The company's intrinsic value for PetroNam is negative 0.26 cent. However, the market price for PetroNam stock is 4 ringgit.37 cent, which means it sold more than intrinsic value, hence resulting in overpriced and overvalued. It is recommended to sell the PetroNam stock since the market price is higher than its intrinsic value to gain profits.
Today I'll be talking about technical analysis and also company versus KLCI. So, what is technical analysis? Technical analysis is a trading discipline that uses statistical trends gathered from trading activities such as price movements and volume to evaluate investments and identify trading opportunities. Fun fact, technical analysis is one of the most widely used techniques in the development of trading system. In a nutshell, technical analysis was concerned with forecasting future price movement based on the study of past price movements. Professional analysts commonly accept three broad assumptions about the discipline. The first assumption would be the market discounts everything. The second assumption would be the price move in trends. Last but not least, the history tends to repeat itself. I guess we all know that different investors use different approaches to technical analysis. Some may employ sophisticated tools to achieve their investment goals, while others may employ simple tools to capitalize on market opportunities. If the investor chooses their strategy wisely, they will still achieve the same profit-making results. So with that being said, I think that is all for introduction for technical analysis. For now, let's move on to company versus KLCI. For company versus KLCI, I took the duration of 27 September 2021 until 25 December 2021 for the short-term graph, while I took the duration of 1st March 2021 until 27 December 2021 for the intermediate graph. Based on the first chart above, KLCI performed better than PETRONAS until 13 November 2021 and 2nd of August 2021 on the second chart. Then, the table turned upside down and KLCI performed less fine afterwards. It is mainly because around the time the table turned around, the market started to grow back as the National Recovery Plan is working pretty well and the rules were getting more lenient.
Next, move to the support and resistance. Based on the chart given, it showed a sideways trend movement from the yearly of March 2021 until the yearly of June 2021. This condition occurred as a result of steady and balanced demand and supply. Meanwhile, this chart also showed a major uptrend from 3 August 2021 until 17 September 2021. This uptrend happened because the price has broken to the resistance line and continues to rise afterwards. Simple moving average, which is SMA. Based on the chart, SMA 20 days were used to identify the short-term strategy, whether to buy or crossover signal that occur from December 2021 until January 2022, and there is a buy signal that can be seen in December 2021. As the closing price above, the moving average, I would like recommend the investor to sell the stock of PETRONAS as there is a sell signal that will occur. The reason why I recommend that investor to sell it is because the closing price is moving below the moving average. This is the opportunity for investors to sell their stock at higher prices from before the stock become bearish. Moving average convergence divergence, which is MACD, according to the chart above, for the short-term analysis, there is no signal whether buy or sell can be seen for this duration. However, a sell signal can be seen in early January 2020 as the MACD crosses below the signal line. Then, for the intermediate term analysis, the price movement are uptrend. The chart above show PETRONAS, which is 12, 26, 9 MACD in the indicator window. There are 5 signal line crossover in 1 year, which are 3 up and 2 down. MACD shows some good signals and bad signals. There were 2 bearish signal line crossover in June 2021 and September 2021, but PETRONAS continue trading higher. Even though upward momentum slow from February until September 2021 due to a lower revenue contribution from its utility segment that came in line with a lower product prices despite higher sales volume. It was still stronger than downside momentum in January until July 2021. The second bullish signal line crossover in August result in a good signal to conclude the MACD indicator. Based on the yearly of January, I would suggest the investor sell the stock. As you can see, there is a sell signal in early January whereby the MACD crosses below the signal line, below the zero line, and MACD histogram turns down above zero. This is the opportunity for the investor to sell their stock and gain profit at a higher price before the stock become bearish. Relative Strength Index, which is RSI, based on the chart above, for the short-term analysis, there is one signal that can be seen at the end of December 2021, which is the sell signal. The RSI indicator does fluctuate above the 70. This means that the price is moving above the 70 line. To conclude, based on the RSI indicator, I would like to suggest the investor hold the stock because the RSI indicator is moving at a uniform pace, hence stable increase and decrease in price.
Now we continue with another 2 indicators for PETRONAS. ROC. According to the chart, for the short-term analysis and intermediate term analysis, there is no signal that occurs during this period. The ROC indicator lines does not filter above 10 and below negative 10 line. This means the ROC indicators were steady and flexible. As we can see, I would like to recommend the investors to hold the stock because ROC is moving at a uniform pace, hence stable increase and decrease in price. Oscillator. For the short-term analysis, the percentage K line crosses below the percentage D line in the overbought range. That shows a sell signal for investor to sell their stock. When the percentage K line crosses below the percentage D line, this indicates that the stock price are going to decrease, which is a selling signal. Additionally, for the intermediate term analysis, there are many buying and selling signals, but some of them are close to each other as well as in March, June, July, August, September, and November. This shows that the stock price rise and drop regularly, which means that investor must pay more attention to this stock as is it very aggressive in terms of price change. To conclude, the investor should sell this stock at the end of this year, as we can see at the end of December. The reason is because there is a sell signal at the end of December, whereby the percentage K and percentage D moved down and crossed the zero line.
Based on the charts above, Petron performed better compared to KLCI throughout the time period of 27 September 2001 until 25 December 2001. Even though Petron performed better than KLCI, the market breadth was still negative. And it is because for the KLCI, December is quite a month as the investor prefers to remain on the sidelines until a series of announcements are made in the upcoming weeks, including Bank Negara Malaysia. This is because we all know that the oil and gas industry will maintain its performance no matter what happens, since the product and services are basic necessities.
Next, move to the support and resistance. Based on the chart given, it shows a sideways trend movement from the early of March 2021 until 20 May 2021. This results from a consistent and balanced demand and supply. Meanwhile, this chart also shows a major uptrend from 27 September 2021 until 12 October 2021. This uptrend is the result of the price breaking through the resistance line and then continuing to increase.
Moving average. For the short-term analysis, the chart shows that there is no buy or sell signal. But in early January 2022, there is a buy signal that can be seen because the petrol closing price is moving above the moving average. Moreover, for the intermediate term analysis, the chart shows a downtrend for this indicator. There is a buy signal in early February 2021, but SMA indicators drop and it has two sell signals, which is in end February and mid-June 2021, because the closing price is moving below the moving average. The reason for the closing price moving below the moving average is because energy stock of Petron fell due to the overall market weakness and profit taking. This is the time for investors to sell their stock in order for them not to lose any profit for falling share price. However, two buy signals also appeared after bearish signal in mid-June. The closing price moved above the moving average twice in a close duration, which is in mid-August and end of September. Then the sell signal has been seen at the end of October. In conclusion, for Petron Malaysia Refining and Marketing Berhad, I would recommend the investor to buy the stock because the closing price is moving above the moving average at the end of December 2021. MACD. As for short-term analysis, there is only one buy signal in the end period of 30 days. As an example, there is a buy signal in the mid-December whereby it showed that the price will be bullish as the MACD cross above the signal line and the MACD histogram turns out below zero. Based on the chart, for the intermediate term analysis, the price movement is quite unpredictable because there are two different signals occurring in February 2021, which buy signal in early February and sell signal at the end of February. However, the signal went back to buy signal twice at the end of May and July 2021. Then the closing price moved above the moving average at the end of October as a sell signal, and mid-December it moved down to cross below the moving average. To conclude, the MACD indicators based on the end of December, I would like to suggest the investor to hold the stock because the MACD does not cross below or above the signal line. Relative Strength Index (RSI). As we can see, for the short-term analysis, there is one buy signal. The RSI is below 30 and move up and crosses over the oversold line in mid-December 2021. For the intermediate term analysis, there are 8 crossover signals, which are 4 sell signals and 4 buy signals. Unfortunately, the price movement is unpredictable because every time the crossover happens, with the buy or sell signal, it happens twice, even though in different months. For example, the RSI is above 70 and then move down and crosses below the overbought line in mid-February and June as a buy signal. Then the line moves below 30 and move down and crosses over the overbought line as a sell signal about twice times that happened in early July and August 2021. This situation also occurred for the other buy and sell signal. Buy signal occurred in early November and mid-December. Meanwhile, sell signal occurred in the end of August and mid-October 2021. Besides that, I would like to suggest the investor to hold the stock of Petron Malaysia Refining and Marketing Berhad because RSI indicators are moving at the uniform space and stable decreasing and increasing price. ROC. For the short-term analysis, the chart shows that the ROC is moving aggressively at the end of December 2021. This is due to the drastic price change for Petron. When the ROC line goes above the zero line from below it and indicate a buy signal as the price of stock is expected to rise. Next, for the intermediate term analysis, the chart shows Petron in a downtrend from February until August 2021. The chart used a 20-day ROC to identify reversal levels within a bigger downtrend. The mid-February high occurred with an overbought reading above 10%. This means Petron was up over 10% in a 20-day period. That is a pretty good bounce within a bigger downtrend. The net overbought reading did not occur until September when ROC again exceeded 10%. Petron brought trend line support in October to signal a continuation of the downtrend. In conclusion, I would like to recommend the investor to sell the stock of Petron Malaysia Refining and Marketing Berhad because the line of ROC is above the zero line and the value of this indicator greater than zero at the end of December 2021. Oscillator. Based on the chart for the short-term analysis, the percent K line crosses below the percent D line in the overbought range that shows a sell signal. When the percent K line crosses below the percent D line, this indicates that the stock price are going to decrease, which is a selling price at the end of December. Moreover, for the intermediate term analysis, there are a lot more buy signals than sell signals, but some of them are close to each other, as well as in February, June, and October. This shows that the stock price dropped more compared to the price rise. To conclude, I would like to suggest that investors should sell this stock at the end of the year. The reason is because there is a sell signal at the end of December whereby the percent K line crosses below percent D line in the overbought range. The last part of this report is conclusion and recommendation. We would like to suggest the investor to buy PETRONAS BERHAD stock and sell PETRONAS Refining and Marketing BERHAD stock. In conclusions, based on the overall result from fundamental analysis and technical analysis, we, as long-term investors, are focused on the ratio of the company. So, it would be best for us to buy the stock of PETRONAS BERHAD and sell the stock of Petron Malaysia Refining and Marketing BERHAD. Is it because PETRONAS BERHAD is performing well in fundamental analysis compared to Petron Malaysia Refining and Marketing BERHAD? Petron Malaysia Refining and Marketing BERHAD is shouldering the debt issue despite being the leading premium oil and gas in Malaysia. For PETRONAS BERHAD, this company is able to generate profits even though in view of the ratio are not performing well in recent years. Overall, PETRONAS BERHAD is more profitable and worth to invest in compared to Petron Malaysia Refining and Marketing BERHAD at this time.